What's up, guys? Let's look at the charts. Let's get into the stock market analysis and try to read what today's price action is telling us so far. 10 in the morning over here on the Pacific Coast, so a few more hours left today. Let's look at what we got. All right, quick note just to give everyone a heads up. I decided yesterday to switch my index short. I had a short on triple Qs. I decided to switch that over to short the SPY, the Sp500. One of the things I pointed out in one of my videos, or I said that I didn't like the fact that we re-entered this gap again, and I mentioned that usually when you re-enter the gap or re-enter a level that was rejected previously a second time, then you have a higher probability to pop through that level, and that's what we saw today. We actually filled the gap right here. So here's gap fill. Now this is major resistance. It is a resistance level. So let's watch to see if there's a reaction here, whether that's a gap down or maybe we overshoot this level just a little bit and then fail. This is an area where there's a higher probability of a reversal, but given the nature of the triple Qs and the tech sector, basically there's four or five stocks that are keeping this thing. Everybody's hiding out in, basically. I was looking at the price action today. Here's the Sp500 Heat Map, and you can see for the most part it's FANG. A little bit of financials, but you can see Amazon, Microsoft, Apple, and a lot of red, but the FANGs are green. So people are still hiding out there in the FANGs. So while people continue to hide out, I decided to switch over to SPY and target the weak sector here, which is a lot more of the Sp500. So rather than having a 40% weighting of the FANG stocks in the triple Qs, the SPY only has a 20%. Now they still can prop up the SPY, but it's not going to move up against me too much without the rest of the market going up. So decided to do that yesterday. So far that's working out, as the SPY or the Nasdaq's up and pretty much everything else is down to flat. Russell's flat. Basically everything's flat. And so that's what we're looking at. But we'll continue to watch the Qs because that is an important sector. And I do think it's going to roll over. But again, we need to see what's happening in just the general market. So here's what I'm looking at. Qs gap fill at 229.50. So at this point, we're at major resistance. Just as gap entry was major resistance, gap fill is also major resistance right here. But we're really close there to the all-time highs. And when you get that close, usually you're going to probably pop those all-time highs. It doesn't have to, but I just would say that there's a higher probability now than before that will actually pop those all-time highs. So whether that's it, we just barely pop the all-time highs and fail, or whether we just never get to the all-time highs, that has yet to be seen. But what's taking place today is gap fill, so we're at resistance. Let's watch it now, see what actually happens. Let's look at the hourly here. So you can see right there, filled the gap, and now we're just kind of chopping around. So probably going to get some sort of a reaction. A pullback down to the gap entry, down to 223, I think would be very probable. And then depending on what happens there, if the buyers step in there, then we could pop and move up to all-time highs. Or we could just fail right here. This could be an area of failure. So we need to wait and see. And the Sp500 has been really choppy. So look, here's the area that we've been in. We've just been in this sideways trading range right here, going all the way back. Really since April 14th or so, but we've been just in this sideways choppy trading range. You can see we've moved up, we've moved down, we moved up, we moved down, we've moved up. Okay, so what's next? We need to break out of this range to get some sort of direction. So while we're at the range, you can short at resistance, you can buy at support. And that's kind of where we're at right now. If you look at the hourly, look, we're just chopping sideways. We've been here, yesterday and today. So what am I looking for? Well, I think it actually would be a positive thing if we popped all the way up to this resistance right up here at 302. Basically, you've got major resistance right there. That goes back to this trading range here, and also the 200-day simple moving average falls right there as well. And so to pop up to there could be the trap, or a bull trap. You want to see those traps set where you have the opportunity to recognize a move up and then a reversal move. So that's a possibility. But again, I'm just hypothesizing, I suppose, because ultimately we've just done nothing. We've just gone sideways. So we're not really bullish or bearish. It's just neutral right now. So we have to, you have to kind of take a side and determine which side you want to be on. Because it's neutral, you could be bullish, you could be bearish. Bulls see this rally and think it's going to continue. Bears see this big drop, see this as a bear market rally, and think it's going to continue down. And ultimately, we have to just wait for a sign to tell us which one is right. So I'm going to take the bearish side for now. Obviously, I've been bearish, so I'm going to continue to stick with that trade until I see a little bit more information that tells me I'm wrong. But we're going to just ride that one out. And Q's overshot. If we go back to the Q's real quick, I mean, Q's, given that it's really just a tech sector, it's a tech ETF, Q's can have larger size moves. It can move down farther and move up farther. So it's not out of the normal that Q's, even if this is a bear market rally, it's not out of the normal that Q's has rallied up this much. Now, I think that Q should stop right here. It should not break to the all-time highs. If this is a bear market rally, I think it really should stop and fizzle out somewhere right around here. Seems like we're going to get that way, but we'll have to watch the volume and look for continued signs that that's what's going to happen. As of right now, it's obviously it's bullish because it's in an uptrend. Price is moving up, but I see this as bearish because we broke the original uptrend that it was in this rally, and then we've been losing momentum. You can clearly see we've been losing momentum. You have this nice steep angle of price movement, and then you break, and now that it's starting to narrow that angle of ascent. So momentum is fading. So we have to continue to just watch and see what happens here. On the SPY, I mean, clearly the SPY shows momentum as pretty much flatlined, basically. We were moving up. This is a daily chart too, so I'm just trying to show the bigger picture. But we were moving up, and then we started to, pretty much just went sideways. So momentum is either a consolidation before another move higher, or it's we're losing momentum and we're going to sell off. All right, so let's get into some other sectors. Here's XLV. Same kind of deal. I mean, the market has just been it has been a real grind over the last 2 months. We were in a period of a lot of volatility recently. Made a lot of money on the downfall. It was actually a pretty easy market to trade and spot the pops and drops during this crash, and then made some money on the way up too. I didn't catch all the gains because I'm longer term bearish, but I did catch some of the gains. And then, but recently we've just been in chop city basically. So it's really hard to actually trade. You have to kind of just take a position and then wait to figure out whether you're right or wrong. And ultimately, if you're wrong, you take some losses, and if you're right, you get some gains. Or just sit out. You don't have to be in the market. You could just sit out and be neutral. That's a possibility as well. So it just depends on what you want to do personally. XLV, this thing's just chopping around up and down. So basically, we've got I still have my resistance right here at 101. I think that's a pretty clean resistance. We keep popping it on the upside, but it turns out to continue to be stop raids, and we fail and come back down. So we're just going to have to let this thing continue to chop, basically. There's not much else to do on that. So we'll watch this. XLF, let's go to this one. Financials. So again, I said yesterday we did have a bear trap. So again, I'm always looking for bear traps or bull traps. That gives you an idea of maybe where the next move is. So this is your bear trap right here, and then we popped it, and then we're moving higher. So I could easily see financials running up to resistance up around this 2350. We also have resistance, so it looks like right here, kind of this middle of the ground resistance right there. Yeah, and so that's sitting at about 2230. So I guess a break above that, we probably run up to 2350, and if we continue to hold in here, then we move down to support, which is around 2130. Not too far down, but so that's what I see on XLF. XLF created a big bear trap. I was looking at this. Look at this bear trap bull trap that was created when we had the big crash. You had all this trading price action in XLF, really from about here. Anybody probably got stopped out there, but really from going back to about January of 2019 all the way up until the whole year pretty much was trapped in XLF. So anybody who was bullish the financials and was buying XLF got trapped right here in one day basically, and all that money was trapped in. They were instantly either pretty much underwater instantly, and then it sold off and trapped them in. So they're still trapped. Everybody, you got a lot of bulls trapped here that want out. So what I would see is any kind of movement up to this gap, which is a long ways up for sure. I mean, XLF, if it wanted to run all the way up there, that's a 20%, 18% gain basically. But you'd have a huge wall of people looking to break even or get out, and they're just so happy to have their money back that they will create liquidity and be selling when or if we get back up to this area here. So that's just something to keep an eye on. Let's look at some individual stocks here. Walmart, look at this one. So this is interesting. They reported earnings today, and they beat revenues, but they guided down, or they pulled guidance, and they also said that they saw increased expenses and decreased traffic that started to stabilize but also decrease. So that's kind of the fundamental thesis behind why I like Walmart short, as well as Costco short. What's Costco doing? Costco's up slightly today, but it's the same thesis that basically you saw hordes of people going to Walmart, hoarding toilet paper and whatnot, basic supplies. And once that's over, they're not going to continue to do that. And then also they're not buying the high margin items. They're buying the low margin items like toilet paper and not TVs. So I think, and then also you've got increased expenses. So all that equals lower earnings basically. So Walmart was priced for, good earnings, but ultimately, so they popped this morning on kind of the news in the pre-market, but when the market came out, they sold that. So what does that tell me? Well, look at that. That just tells me that, that tells me that the institutions are selling into, any kind of strength, that they are going to see continued weakness for stores like Walmart. And they think that their earnings are going to get worse and the situation's going to get worse. So we'll see how this plays out over the next few days, whether this continues to sell off. That'll give you a good idea of probably where the stock's heading. Let's look at the technicals here. So resistance, I put it up here at the top here, 132.96, and then we've got the gap right here at 127.91. So that was the gap. That's where I entered the trade. I'm still in the trade, and they popped it against me this morning, but I was, you can't just get freaked out over the future or the pre-market or after hours market. You need to see what the market when it opens is going to do, because that's where the that's where the big money that has the potential to move the market comes in. So here's your gap, 127.88. We're now within the gap again. So if this holds down here, then that's a recapture of the gap. That should bring us back down to down to here around 125, and then we'll have to wait and see. Probably chop around a little bit more around this level. So I don't know what's going to happen now. If it holds and recovers this gap at 127.87, if it holds, then that could hold the support. And if that holds the support, we could easily run up and even break above these highs. So have to watch for that every hour. Pivotal hours like this in inflection points do matter. So it's important to watch. And what they try to do, this hour is probably not going to close above that, because we've got 3 minutes left and Walmart's continuing to sell off. So looks like that's a recapture of the gap. That's bearish, especially the momentum that this thing had from way up here, selling all the way off and closing back below the gap. So now, we probably get a back test of this gap at some point and then, roll over. But that tells me Walmart's going lower from here. Let's move on and let's see what the volume is real quick before I wrap up. And big volume, see the volume. So big selling volume, any kind of, people who owned Walmart used the earnings to sell into. That's what that is. So that's not, sellers showed up when they popped the stock higher. That tells me there's more sellers here that want to sell this thing lower. Apple, back testing. So Apple's got, again, we just have to watch this. Apple have to move this up, but Apple is probably going to run up and do a full back test. And then at that point, look for some weakness in Apple, look for the weakness in Qs, and look for the weakness in really in the stock market. So we're just kind of watching it. It's just grinding along this trend line. We're just waiting for that. Microsoft, nothing's changed. Tesla, for the most part, nothing's changed. Although I did notice this trend line. I didn't quite have it marked out, but look at the daily here. You can see we've got reaction here. Nice big red impulsive candle verifies that reaction with volume. See the volume? You always want to see volume around reactions, and volume spike right here. So, and then reaction, and then right here. So if you can see, and then also on the lower end, look, reaction low, reaction, and then, so we've broken the uptrend, and we're just, kind of riding along this resistance, which is sitting right up here around 835.75. So we could run up and tag it again, but ultimately that's pretty major resistance. So I'm looking for that to hold. If they break that and pop that up, then Tesla could run. So again, anytime anything breaks a resistance, so what I look for is a fake out. Is it going to pop it, run some stops, and then turn around and roll over? If it does that, it's very bearish. It's a great opportunity to jump on a short trade. So we're just going to continue to watch this one, see if there's anything that will come out of this. If this does want to sell off, you've got some support right down here. Sitting right about there. That's gap entry 688, and then gap fill 650. So still haven't, see the gap right here. That gap should get filled on any kind of weakness in Tesla. We should fill that gap, and you'll probably have some buyers looking to step in and buy this thing or get some sort of a reaction around that level. So that's kind of what I'm looking at. I'm looking for Tesla to run down and fill this gap. Whether it does it, we'll wait and see. Here's a trade idea, Home Depot. So they reported earnings as well, and I was looking at this, and look what we got going on. So we've got this upward trend line, and I was looking to verify if this is a good trend line, and you can see down here we had lots of reactions around it. This was a real volatile area because it was an inflection point. The market was bottoming out during this first leg down, and so, but look, we've got tags there, held as resistance, held again, and then we broke it and closed above it. And when we did that, we gapped higher. So there was a reaction right there in the gap. So that tells me that that's relatively valid. and then we get reaction here as we move up, you know, reactions, several reactions holding support. And then recently we broke it, so it's starting to get a little volatile again. Again, it's this is what I'm trying to point out. The trend line that is in place now was violated and broken down here at the lows because you had volatility and you had indecision. So it was buyers and sellers fighting over where they thought the thing was going. Ultimately, the bulls won this battle down here, which makes sense because there was such a huge sell-off. The thing was really oversold. So the bulls won. Then you held support. You're running higher. But now look up here, starting to get that same kind of battle where we're violating the trend line. We broke it here. It popped back above, you know, back below. This actually up here is a island top reversal. So see the gap? You have a gap here and a gap here. So you've created this island top where it's just floating up here and then reversed. And we're starting to break down again. So ultimately we've, you know, there's a lot of things you can look at that tell me that this thing should go. You know, you have the violation of the trend line and starting to get volatile up here. And then you also have an island top reversal. So, you know, and then we've broken the trend line again. You can see here it held. I was watching it, and then this impulsive candle down, not super impulsive, but follow through right there, and we continue to sell. So now the day's not over, but we'll have to continue to watch. And there's also support that's right here, 239. I get that from you've got a couple reactions back here. The peaks right here, you can see it held the support right there. Then it broke, came back, held as resistance. You had 1 hour pop above it, but it ultimately failed, so it held. And then right here we held as resistance, and then we came up and popped it, and now we're coming down. So it could hold as support, and then we could do some back testing before rolling over. That's possible. But ultimately we have to just wait and see. So that is support. We're below it as of right now, 239. We're below it. We did have an hourly close below it right there. So this might continue and actually sell off to the next support line, which looks to be right around 232.83. And there's a gap there from that. And so ultimately I see things in this stock that are telling me that's bearish. So TVIX, let's look at this one. So here's TVIX. We're basically just riding support right here, just kind of treading water. Riding, you know, grinding along support. So, you know, that tells me that we're close or getting close to a volatility event. Whether that's up or down, I don't know. But, you know, what this tells me is that TVIX is going to hold and we're going to pop and we're going to move higher and get some sort of, you know, volatility event. Whether it does, I don't know. What I prefer to do on TVIX is, you know, I watch the SPY. SPY is at resistance, so here's your SPY at resistance. So that tells me, okay, you can take a shot at you know, you can take a shot and have a TVIX position while you're at resistance. If SPY breaks resistance, then what happens next? Does it break resistance and then fail and create that bull trap? Then that's a great entry for TVIX, and that's kind of like what you saw here, where TVIX started to sell off and then held and then recovered. So just something to watch right there. Whether we break to the downside or hold support and pop higher has yet to be seen. But a lot will depend on what happens in SPY and triple Qs ultimately. So you know, that's what I'm watching there for volatility. But again, just riding that support. So support is support until broken. Okay, just to wrap it up. So once again, you know, if you're bullish, then you know you're trading a pretty thinly traded market. You've got tech, you know, and FANG basically, you know, keeping the market up, which because they're so heavily weighted, I think that can be deceiving. That the market moves higher on weak breadth. I think is what they call that. So if the market's moving higher and you're just watching the Sp500 or the Dow or whatever, then you know these FANG stocks are kind of grinding the market higher, while the rest of the market and the rest of the stocks are kind of deteriorating and going lower basically. So all it takes when you have a really thinly traded market is, on weekdays, on days that the FANG stocks are weak, the market, just completely, sells off hard because there's no strength on any other sectors. And so, if you're bullish and riding the trend, you are riding the trend for the most part on the FANG stocks. And so that's kind of your lifeline, and that's just something to watch. I'm looking obviously for the bearish sell-off trade. I think we're in a bear market rally. I'm going to continue to believe that. I know I say it day in and day out, but when you put out daily videos, my view doesn't change. Excuse me, my view doesn't change day to day, so I have to continue to stick with that longer term thesis that I have until I see signs or changes, which over time will happen. Eventually, my bearish view will change, but I don't think it's going to change until after we get another leg down, and then I'll start to, probably start to flip bullish. So that's kind of where we're at. Of course, we could always go higher, and if I start to see major participation in bullish movements, then I could change my view as well on that. But for now, all I see is a sideways market over the last 2 months. I see a drop, I see a rally, and I see a sideways market. And this is very typical action for bear market, bear market rally to drop, to have a relief rally. You always have rallies in bear markets, suck in the longs, and then, make your next leg down. So ultimately, that's what I see. We'll see if that if that proves to be true or if it proves to be wrong. But that's the look. So thanks, guys, for following along. Give me a thumbs up. Appreciate it. If you want me to look at other interesting sector stocks or something going on, let me know. I'm kind of starting to look at the deterioration in the other sectors besides tech. So I'm trying to understand if that's going to eventually, if tech's going to be dragged down. I do want to jump on that short trade if and when that happens. But for now, I see strength. There's more strength in tech and less strength in the general market and some of the other sectors. So that's why ultimately I decided to switch my short trade over from Qs to Sp500, or SPY is what I use. And we'll just continue to watch that. If we pop much above this 302 on the Sp500 or the SPY, pop much above that, if we get, if that pops and it holds on a daily close, I'll probably stop out of my SPY trade. So my stop is up in this area, above 302-ish, and but I'm looking for signs of market participation. If we pop it on really low volume, that's not a confirming candle. I need to see a pop, and I need to see increased volume, and then I need to see follow through after that daily pop. And if we do that and we get that, then I'll go ahead and stop out. So thanks, guys. Catch you on the next one. Bye.